I have become very intrigued with a recent article by Jeff Snyder in the Eurodollar University. And his main point is that the banking system, particularly since 2008, has changed. And it's changed in a way that fundamentally could be difficult for the U.S. economy and other economies as well, because it has moved away from lending to the real economy. That is to say, if somebody wants to build a plant in the United States and they go to a bank for a loan and the bank lends the money and the plant is successful, that helps the growth of the overall economy. It could be more productive, etc. And what Snyder is seeing from the numbers is that that ability to lend to the real economy has the trend growth rate of that has stopped, has slowed down starting in 2008. And of course, the big reason for that is that because we had a very difficult time with the subprime mortgage issue, and banks had difficult times as well, that Snyder would say, and I would agree, that the long-term ability of banks to lend to the same degree to the real economy has slowed since 2008. And then on top of that, recent developments that he talks about in the last few months add to that concern. For example, the introduction of Donald Trump to the presidency once again is a factor that, until recently, has caused an increase in interest in the dollar, because foreign investors will say, hey, the good things that Trump and the financial media are talking about that that the Trump administration can do will help the U.S. economy grow, and we'll have a soft landing situation, and therefore foreign investors, as can be seen by the strength in the dollar, um, since in the last recently has grown, and that changed, however, according to Snyder, and the numbers are there, just in the last 2 weeks. Now the dollar, which had gotten up to a certain point, I think on the index, like to 109, has already dropped down to 107. And so I think that we are seeing some important factors because, as I've said elsewhere, the the ability of Donald Trump to cause the U.S. economy to rebound based on a number of good things that he's talking about, I continue to think is limited, and is limited in large part by the enormous debts in the United States and the federal government, the $36 trillion amount of debt, which means, among other things, that the ability of the Fed or anybody else to cut interest rates and have those stick is limited, because we've got to push interest rates up at the Treasury, which has all so much money, over 100 billion a week, to raise for the Treasury, can only get that money by if the buyers, such as money market funds, who are currently huge buyers of treasuries, if they say, hey, we want a higher interest rate in order to loan the government the money. And that's one reason why you have, in near term, a very difficult situation to keep interest rates down the way the Fed has tried. And I've said before that if you look at what's happened to the bond market since the Fed cut their interest rate in September, the Fed funds rate, the bond market has gone the other way. While the Fed funds rate were cut, the bond market, talking about, say, the most important, the 10-year T-bond, has gone from a interest rate of a yield of 3.6 or 7% to 4.6% or even higher. And if, as is possible, and Jeff Snyder would agree, that the interest rate for the long term, 10-year or 30-year T-bonds, but particularly the 10-year, goes above 5%, that could cause real difficulties. Snyder also says that one of the problems with this is that those higher interest rates can, according to Snyder, cause more bank defaults approaching the way it happened for Silicon Valley Bank the last time. And so this to me is an interesting article, and I use it a lot in my overall focus on why I like the silver mining stocks so much, because I think this problem with higher interest rates can trigger a stock market break, and that in turn can trigger a further increase in the price of gold and silver. And gold is this last week has moved up to being very close to its all-time high. And so you put all those things together, and I find that this article by Snyder, being very concerned about the global banking system, is one that I am finding of great interest and that I plan to benefit from.